Good afternoon and welcome to our press conference with President Lagarde and Vice President de Guindos. My name is Wolfgang Preußel. We have also participants that are connected via video stream. If they take the floor and ask questions, I would ask them to turn on the camera and their microphones, obviously. And with that, I hand over to President Lagarde, please.
Thank you very much, Wolfgang, and good afternoon to all of you present in the room and on screen. So the Vice President and I welcome you to our press conference. We would like to begin by congratulating Bulgaria on joining the euro area on January the 1st, 2026. We also warmly welcome Dimitar Radev, the governor of the Bulgarian National Bank. He joined the Governing Council today with voting capacity. Membership of the euro area has almost doubled since 1999 and is testimony to the attractiveness of the single currency and the enduring benefits of European integration. We will now report on the outcome of today's meeting. The Governing Council today decided to keep the three key ECB interest rates unchanged. Our updated assessment reconfirms that inflation should stabilize at our 2% target in the medium term. The economy remains resilient in a challenging global environment. Low unemployment, solid private sector balance sheets, the gradual rollout of public spending on defense and infrastructure, and the supportive effects of our past interest rate cuts are underpinning growth. At the same time, the outlook is still uncertain, owing particularly to ongoing global trade policy uncertainty and geopolitical tensions. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. And I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So looking at the economic activity first. The economy grew by 0.3% in the fourth quarter of 2025, according to Eurostat's preliminary flash estimate. Growth has mainly been driven by services, notably in the information and communication sector. Manufacturing has been resilient despite the headwinds from global trade and geopolitical uncertainty. Momentum in construction is picking up, also supported by public investment. The labor market continues to support incomes, even though demand for labor has cooled further. Unemployment stood at 6.2% in December, after 6.3% in November. Growing labor incomes, together with a lower household saving rate, should bolster private consumption. Government spending on defense and infrastructure should also contribute to domestic demand. Business investment should strengthen further, and surveys indicate that firms are increasingly investing in new digital technologies. At the same time, the external environment remains challenging, owing to higher tariffs and a stronger euro over the past year. The Governing Council stresses the urgent need to strengthen the euro area and its economy in the present geopolitical context. Governments should prioritize sustainable public finances, strategic investment, and growth-enhancing structural reforms. Unlocking the full potential of the single market remains crucial. It is also vital to foster greater capital market integration by completing the Savings and Investments Union and the Banking Union to an ambitious timetable, and to rapidly adopt the regulation on the establishment of the digital euro. Looking now at inflation. Inflation declined to 1.7% in January from 2% in December and 2.1% in November. Energy inflation dropped to minus 4.1% after minus 1.9% in December and 0.5% in November. While food price inflation increased to 2.7% from 2.5% in December and 2.4% in November. Inflation excluding energy and food eased to 2.2% after 2.3% in December and 2.4% in November. Goods inflation edged up to 0.4%, whereas services inflation declined to 3.2% from 3.4% in December and 3.5% in November. Indicators of underlying inflation have changed little over recent months and remain consistent with our 2% medium-term target. Negotiated wage growth and forward-looking indicators, such as the ECB's wage tracker and surveys on wage expectations, point to a continued moderation in labour costs. However, the contribution to overall wage growth from payment over and above the negotiated wage component remains uncertain. Most measures